Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you could head to incomeinvestors.com. You can find the link to the website in the description below. With inflation cooling and interest rate expected to start coming down in coming months, the shine is back on interest rate sensitive stocks like real estate investment trust, or REITs for short, like Simon Property Group Inc., traded on New York Stock Exchange under symbol SPG. Last year was a challenging one for REITs thanks to the rapid increase in interest rates, with even industry giants like Simon Property struggling for much of the year. From the start of 2023 through October 31st, SPG stock was down 1.87%. But in early November, the Fed hinted that it was done raising rates for this cycle. And on December 13th, Fed not only held interest rates pat again, but the Federal Reserve's chair, Jerome Powell, said outright that it's not likely that the Fed will raise interest rates further. If anything, it's expected that the Fed will begin cutting rates in 2024 and as many as 3 times. John?
Yeah, suffice it to say, investors have been exceptionally bullish since early November. The biggest surprise may have been actually the REIT sector. During the last 2 months of 2023, the Real Estate Select Sector Spider Fund, which trades on the NYSE under XLRE, actually rallied an impressive 22.3%. Now, Simon Property Group stock has also been on a tear since early November, rising 43%. Now, a rising tide lifts all boats, but Simon Property comes by its gains honestly. In addition to macroeconomic tailwinds, Simon Property also reported management's term excellent fourth quarter and year-end results, with record annual funds from operation, at least 18 million square feet, and announced 13 significant redevelopment projects. It also announced total 2023 shareholder return of 29.3%. Of that, it returned $2.9 billion to shareholders in dividends and share repurchases, and it raised its quarterly dividend.
What can you tell us about Simon Property Group?
Simon Property Group is not a big surprise. It's a REIT, buys premier shopping, dining, entertainment, and mixed-use destinations across North America, Europe, and Asia. Now, in 1993, its portfolio was valued at $3.5 billion and consisted primarily of properties in the middle market malls in the Midwest. Now, today, Simon's diversified $85 billion portfolio includes over 250 properties in 37 states and 14 countries. And over the past 3 decades, Simon's total consolidated revenues increased 13 times from $400 million to over $5.5 billion, with funds from operations increasing nearly 30 times from $150 million to $4.5 billion. Yeah, in addition to premium retail spaces, the company's growing portfolio includes office spaces, hotel, residential, and partner outlets. Now, over the last several years, it's actually added over 4,200 hotel and residential units to its portfolio.
The management made a point of saying that it reported excellent fourth quarter and 2023 results. Can you elaborate a little bit there?
Yeah, for the fourth quarter ended December 31st, 2023, Simon Property announced that net income increased 11% year over year to $757.5 million, or $22.29 per share, and funds from operation increased 8.5% to $1.38 billion, or $3.69 per share. Now, for the full year, income grew 6.7% to $2.28 billion, or $6.98 per share, and funds from operation advanced 4.5% to $4.68 billion, or $12.51 per share. And just some besides statistics, at the end of the year, occupancy at its malls and premium outlets stood at 95.8%, and that's up from 94.9% at December 31st of the previous year. The base minimum rent per square foot was up 3.1% year over year at $56.82. And the outlook for 2024 remains pretty solid, with management expecting to report net income in the range of $6.45 to $6.70 per share, and funds from operation in the range of $11.85 to $12.10 per share.
And income investors would love this. This company raised its quarterly dividend by 8.3%.
Yeah, Simon makes a lot of money, and as a REIT, legally has to distribute at least 90% of its taxable income to investors, which it does in the form of a frothy, growing high-yield distribution and the less popular but equally important share repurchases. In February, this board declared a first quarter dividend of $1.95 per share, or $7.80 per share on an annual basis, for a current yield of 5.13%. Now, this represents an increase of 15 cents per share, or 8.3% on an annual basis, over the $1.80 it paid out in the first quarter of 2022. Now, in addition to growing distributions, Simon has also recently announced a new $2 billion share repurchase program.
Since December 1993 IPO, SPG Stock has provided a total return of 3,100%.
Yeah, Simon's property is a powerhouse when it comes to dividends, share repurchases, and share price gains. Since its initial public offering in December 1993, Simon Property has, according to the company's own calculations, delivered total returns, and that's share price gains, reinvested dividends, etc., to shareholders of 3,100%. On March 19th, Simon Property Group hit an all-time record intraday high of $154.21. And on the same day, it also reported a record closing high of $154.10 per share.
John, thank you so much for your insights. Thanks to macroeconomics tailwinds, REITs are back in the spotlight, and Simon Property Group Inc. is one of the best. It reported, in the words of management, excellent fourth quarter and full year results, and provided solid guidance. It has the #1 balance sheet in the industry. It raised its quarterly dividends, announced a new $2 billion share buyback program, and its stock hit a record levels. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.